morning and welcome to Radio Friends on Friday, September the 1st. Hard to believe the first day of September is here.
I know.
Got ALEX LaBRUNERIE. Good to have
Paul,
you here. ALEX
great to see
LaBrunerie
you.
from LaBrunerie Financial. Now, you were on about a month and a half ago, and we talked about different types of financial planning. I think we were talking about how to, if people wanted to borrow money on their house, the reverse mortgage, if that was a good thing or not. But today, we've got several topics.
Yes.
Let's start first of all about tax planning. We've got 3 or 4 months left before the end of the year. Now is the time to do that.
Yes, because as you mentioned, Paul, the summer has sped away. It's September 1st already. And before we know it, it's going to be December 31st, and that we ought to be people ought to look at their gains this year in their portfolios, if they have any, and look at ways to offset them with any losses they may have for a tax-efficient harvesting, we call tax harvesting. Mm-hmm. Work with their accountants.
It's called tax harvesting?
Tax harvesting, yes. Okay. So if you have a gain in a stock and a loss, you might be able to sell the stock if you feel that's to your advantage, and then sell the loser, and the government will allow you to deduct part of your capital loss to offset your capital gain.
Now, this is something that you would have to talk with your accountant about.
Yes. So
and your accountant could advise you.
Advise you in catching them before 12/31, because you have to make these transactions before the end of the calendar year. And oftentimes people show up after that, and the accountant doesn't have any time to look at it, so she is caught off guard and can't give advice. So this is a good time to talk to your accountant while she has time.
So talk to the accountant early so that you can make plans for the end of the year.
That's right.
The other thing on the line of tax, many people who have put money away from their work with the 401bs.
Yeah, the 403b and the 401k.
Yeah. And if you're in my age group,
yes,
you have to start
youthful.
in the youthful group.
The youthful group.
70 and a half.
Yes.
You have to start taking your required minimum distribution.
Yes.
And you have no choice on that.
Yes, that is Uncle Sam catching up with everyone who's added to their 403bs or 401ks or IRAs. They want to have those IRA monies taxed over your lifetime.
So how do you figure out what is your minimum distribution that you have to take?
It's a fairly simple calculation. You need your balance from the previous December 31st, and then there's a life expectancy table, and usually your first year equates to about 4.5% of your IRA balances and other tax shelter balances if you're fully retired. So that can be done. You can look at those. You can find those on the IRS website. You can Google RMD, or required minimum distribution calculator. So those formulas are easy to get to.
But the important thing,
your advisor probably has one. Your tax accountant.
The important thing to keep in mind, though, is if you do not take that required minimum distribution, you're going to be penalized.
Yes, it's not. It's a 50% penalty on the required amount, so it's not to be missed.
Okay. So. Now, if you have to take that and you want to make a charitable contribution,
you can't.
Can you use that money that you're taking as a required minimum distribution, make a charitable contribution, and wipe out the tax?
You can. You can very much, negate that liability by making a charitable contribution. Churches, schools. I hear that the University of Missouri might be wanting some contributions. So KVIA.
So you can use that money as a charitable contribution, and it will wipe out the tax?
Yeah, on that piece of money, yes. So if it's $5,000, that's your required minimum distribution, and you wanted to transfer that to the University of Missouri
or to KVIA,
directly, you could.
But you have to transfer it directly?
Yes. Okay. Yes, and there's ways to do that, and again, that should be planned by 12/31.
Okay.
not April 15th.
Okay, that
So
has to be
we've
done
got some time this
by
autumn to look at that.
December 31st of this year.
Yes.
Not April the 15th
That's
of
right.
next year when
That's
you
right.
do your taxes.
So if it's January 1, it's really too late. So
Okay.
that's why I think it's important for us today to talk to the people
Yeah.
about that. Also, increasing one's if one's not retired, if someone is 50 years old and wants to maximize their IRA or their 403B, their workplace savings, they should do that before 12/31. And if they want to make a tax-deductible 529 Missouri most, a savings for a child or a grandchild, that also has a 12/31 cutoff date too.
December 31st
Yeah,
of this year.
that's right.
You can't do it.
Not April 15th.
Okay, okay. The other thing, saving for long-term care.
Yes.
This is something that I think most people probably don't do.
It is. I think it's that last phase in our lives or in our parents' lives, and many of us see it and are living it now, but we don't like to talk about it because as much as openly as far as a financial plan is concerned. But so when someone's age 90 or 92, their needs for long-term care are very great, and long-term care kind of specifically designed is if you can't physically take care of yourself. It's called the 6 activities of daily living. And so it would be bathing, feeding, using the restroom, transport, able to get in and out of chairs.
Mm-hmm.
Those are the 6 daily living activities. If you can't do 2 of those 6,
Then you
start to qualify for long-term care.
But you have had to signed up for long-term care for this.
For insurance, yes.
For
that's
insurance.
right.
Now, Medicaid would take care of this if you qualify, and means you have to draw down on most of your...
You do, and you have to meet some strict criteria there, and those are some serious things that should be planned for. Also, I want to say that veterans, the Veterans Administration has some very important benefits that any family of a veteran ought to educate themselves on.
If people want more information, we're out of time, Alex.
Sure.
They can contact you. What's your phone number?
449-5313.
Okay, 449
5313.
5313.
Yes.
449-5313. That's LaBrunerie Financial. Alex LaBrunerie, thank you so much for
Thanks,
coming by.
Paul.
You've been a big part of the community for a long time. Started with your dad.
Yes, it
And
did.
now you're taking over there.
Yes.
All right. Thanks,
Thanks,
Alex.
Paul.
All right. Out of time for today, Monday. Kathy Barton and Dave Pereira will entertain us. See you then.